Let's talk about getting approved for financing as a startup company. Here at Beacon Funding, we often hear startup companies say they are worried they won't get approved for financing. That is only a half-truth. Startups do get approved. They just face several more obstacles than a well-established business. But the experts at Beacon Funding can help. First, let's take a step back and define a startup business. A startup in the equipment financing industry is defined by a business, sole prop, LLC, corporation, etc., with less than 2 years in business since when they registered within the state they operate in. Consider financing options beyond the bank. Startups are riskier in the eyes of the lender because it takes time for startups to establish proof of concept and prove the ability to overcome obstacles and generate a profit. Additionally, being new, you don't have any established business credit to point towards as reasonable proof of your ability to repay a loan. Most banks will not offer money to businesses with less than 2 years in business and a 5-year cutoff, due to the fact provided by the U.S. Bureau of Labor Statistics that 20% of new businesses fail within the first 2 years and 45% within the first 5 years in business. How can you find a lender that is willing to support you? With all that being said, there are other options than your bank. These options will consider more information to make a more informed credit decision. These considerations primarily revolve around personal financial statements, personal credit history, and the asset being financed. Other lender considerations could include additional collateral cosigners, industry experience, cash down, and a strong business plan. The more areas of strength you can provide, the better your chances of approval and even more competitive terms. How to lower your financing costs if already an approved startup. As a general rule of thumb, your credit quality will directly correlate to your cost of financing. However, just because you are a startup business doesn't mean you have low credit quality. It just means you need to bring enough strength in other areas to the table to lower your cost of products. Over time, you can expect your costs and funds to decrease as you've been in business for a longer period and establish things like timely paying, business credit history, and a higher cash flow. To talk to a financing consultant today about your startup business, visit beaconfunding.com/startup to schedule a conversation.